Industrial production data stands as one of the most vital economic indicators, offering a real-time snapshot of a nation's economic pulse. It goes beyond mere numbers, reflecting the collective output of factories, plants, and workshops that form the backbone of a country's economy. By tracking the ebb and flow of industrial activity, economists and policymakers can gauge not only current performance, but also anticipate future trends and potential challenges. This data reveals the underlying health and direction of a country's economy, acting as an early warning system for both growth and contraction. When industrial production rises, it often signals robust demand, increased employment, and a positive outlook for related sectors such as logistics and retail. For Germany, a global manufacturing powerhouse renowned for its engineering and exports, these figures carry even greater significance. The country's prosperity is closely tied to its industrial sector, making every shift in production numbers a matter of national and international interest. Shifts in industrial output can sway financial markets, influence government policy decisions, and serve as a barometer for broader economic trends. Investors, business leaders, and politicians all pay close attention to these reports, knowing that a single month's data can spark optimism or concern. When production is on the rise, it typically points to economic strength, suggesting that businesses are confident, orders are up, and exports are thriving. This can lead to job creation, higher wages, and increased consumer spending, fueling a virtuous cycle of growth. Conversely, declines in industrial output may serve as an early warning sign of trouble ahead. Falling production can indicate weakening demand, potential layoffs, and a slowdown that could ripple through the entire economy. That's why the unexpected rise in Germany's industrial output in November 2025 caught so many by surprise. It defied forecasts and challenged prevailing narratives about economic stagnation, prompting a wave of analysis and speculation. Analysts and observers around the world closely monitored Germany's industrial data, given the country's outsized role in the European Union and its influence on global supply chains. A shift in German output can have ripple effects far beyond its borders. In this essay, we'll delve into the factors behind Germany's surprising November surge, examine its broader implications, and explore what it might mean for the future of Europe's largest economy. In November 2025, Germany's industrial production rose by 0.8%, defying forecasts. This uptick highlighted the sector's resilience amid global uncertainty. Manufacturing and construction led the gains, with strong demand for German goods at home and abroad. Germany's performance stood out against declines in other major economies. The rise is more than a statistical blip. It's a testament to the country's industrial strength. Let's dive into what's driving this unexpected growth. Many analysts had predicted a decline in Germany's industrial output for November. Reuters polled experts expected a 0.4% drop, citing energy issues and global headwinds. Ongoing supply chain disruptions and geopolitical tensions fueled their pessimism. Yet the actual data showed a surprising increase, challenging these forecasts. This gap between prediction and reality highlights the complexity of economic forecasting. It also underscores Germany's ability to adapt and outperform expectations. What explains this unexpected resilience? Germany's surprising economic surge in November has left many analysts and observers eager to understand what's truly driving this unexpected outcome. While headlines often focus on numbers and forecasts, it's essential to look deeper and examine the underlying factors that have contributed to this remarkable performance. What's really working behind the scenes? And how has Germany managed to defy the odds during a period of global uncertainty? The country's adaptability and relentless drive for innovation have long been at the heart of its economic resilience. German companies are known for their ability to pivot quickly, embracing new technologies and processes to stay ahead of the curve. This culture of continuous improvement has allowed businesses to weather economic storms and emerge even stronger. Another key factor is Germany's robust infrastructure and highly efficient supply chains. Even as global disruptions threatened to slow production, German logistics networks adapted rapidly, ensuring that goods continued to move smoothly across the country and beyond its borders. This efficiency helped keep factories running and shelves stocked. Technological advances have also played a crucial role. German industries have invested heavily in automation, robotics, and digitalization, allowing them to respond quickly to new challenges. A highly skilled workforce, trained to operate and maintain advanced machinery, has been instrumental in implementing these innovations and maintaining high productivity. Government support has been another pillar of strength. Targeted incentives, financial aid, and policy measures have provided businesses with the resources they need to adapt and grow. Close collaboration between the public and private sectors has fostered an environment where innovation and stability can thrive, even in challenging times. Diversification across key sectors such as automotive, machinery, and chemicals has also provided a buffer against market volatility. By not relying on a single industry, Germany has been able to maintain stability and continue growing, even when certain sectors face headwinds. Ultimately, it's the combination of innovation, infrastructure, skilled labor, government support, and sectoral diversity that has fueled Germany's ability to outperform expectations and set a new standard for resilience in uncertain times. Several strategic factors have powered Germany's industrial rebound. Technological innovation and automation have boosted efficiency and output. Heavy investment in research and development keeps German industries globally competitive. Germany's central location in Europe ensures strong trade links and reliable supply chains. A highly skilled workforce, thanks to robust vocational training, supports advanced manufacturing. These strengths have allowed Germany to thrive even amid global uncertainty. The result? A resilient, forward-looking industrial sector. The recent surge in industrial output is a clear sign that Germany's economy is regaining its strength and momentum. After a period of uncertainty and sluggish growth, this uptick in production is a welcome development for businesses, workers, and policymakers alike. It reflects not only increased demand for German goods both at home and abroad, but also renewed confidence in the country's economic fundamentals. More production translates directly into more jobs for German workers, higher wages, and greater job security. As factories ramp up operations, they hire more staff and invest in training, which helps reduce unemployment and boosts household incomes. This, in turn, leads to increased consumer spending, as people feel more confident about their financial future and are willing to make larger purchases. The positive momentum in the industrial sector can set off a virtuous cycle of growth, encouraging both domestic and international investors to put their money into German companies. As investment flows in, businesses expand, innovate, and create even more opportunities for growth. This can help Germany maintain its reputation as a stable and attractive destination for global capital. With higher levels of production and employment, the government collects more in tax revenues. These additional funds allow for greater investment in public services such as healthcare, education, and transportation infrastructure. Improved infrastructure not only benefits citizens, but also makes German businesses more competitive on the world stage. Germany's robust economic performance sends a strong signal to its European neighbors and trading partners. As the largest economy in the Eurozone, Germany's growth helps stabilize the region and inspires confidence among other member states. This can lead to greater economic cooperation and shared prosperity across Europe. As the economic engine of Europe, Germany's success has far-reaching effects. Increased exports mean more business for logistics companies, ports, and railways, not just in Germany, but throughout the continent. Neighboring countries benefit from stronger trade ties and increased demand for their own goods and services. The latest economic data reinforces Germany's position as a global leader in industry, innovation, and economic stability. Policymakers and business leaders around the world look to Germany as a model for resilience and adaptability in the face of global challenges. With these positive trends, Germany is well-positioned for continued growth and long-term stability, setting the stage for a brighter economic future for both the country and the wider region. Germany's industrial growth has global implications. As a major exporter, its output shapes international trade and supply chains. The uptick in production helps stabilize global markets and sets a benchmark for others. Germany's shift toward renewables influences global energy trends and climate efforts. A stronger euro, driven by industrial gains, can impact global trade balances. Other nations may look to Germany's strategies for inspiration. The world is watching as Germany leads by example. Looking ahead, Germany's industrial sector faces both promise and risk. Continued innovation and sustainability offer paths to future growth. But challenges remain. Geopolitical tensions, energy prices, and shifting trade policies. Strategic planning and workforce development will be key to staying ahead. Investing in education ensures workers can adapt to new technologies. Germany's industrial performance will remain a bellwether for the broader economy. Staying dynamic and resilient is essential for long-term success. In conclusion, Germany's November industrial surge highlights its economic resilience. The country's focus on innovation, planning, and skilled labor has paid off. This growth benefits not just Germany, but the global economy as well. Other nations can learn from Germany's adaptability and forward-thinking approach. Continued investment in technology and people will sustain this momentum. Germany's industrial sector is poised to shape the future of global manufacturing.